Money printers, money printers, money printers, my billionaire family. Welcome, 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 welcome. We are happy to have y'all. Woo! Feel a lot of money. A lot of money talk this evening, but welcome. This is 7 figures in 3 months. How our billionaire brother swing traded his way out of his 9 to 5. All right. The title says 9 to 5, but he was working 2 full-time jobs. You know, that title is a little bit longer. You know what I mean? So we kind of downplayed it. So we watched live and direct the youngest millionaire in our community do it in a couple of weeks after trials, tribulations, one-on-one sessions. You know, I tell the story all the time, but I remember his first one-on-one session with me, came back to 2 more, you know, joined a mentorship. And from there, y'all gotta look up in the skies. That's where y'all gonna find him. He's out of space. So without further ado, I would like to officially bring our billionaire brother to the stage. Billy Boy James, the floor is yours. Please drop some fire, some gems, some unicorns, some sprinkles, ice cream, any emoji in your phone. Drop that in the chat. If y'all ready to get this knowledge, come on. Come on. Floor is yours, bro.
All right. I said good morning from my end because it's after 1 a.m. over here. Good morning, good evening, wherever you are. I'm actually happy to be here, especially on the last day of this 3 days event. And one thing I can guarantee you is if you pay attention here right now, if you could just let go of every distraction, whatever you was doing. Somebody said my Peking James. Yeah, if you can just let go of every distraction and just pay attention to exactly what we got or we about to have going on here right now and take notes, ask questions, you are definitely gonna leave here with a whole different mindset, especially when it comes to swing trading. But yes, like Dan said, take a lot of notes. You want to take a lot of notes and ask a lot of questions because you pay for this, right? You deserve more, right? I'm going to try my best to see how best I can deliver and over deliver. But you'll be the one to push me further than what I think I'm capable of. So I need you to ask some questions. There's like within this room right now, there is nothing like a dumb question. There's no dumb question. The dumbest question is the one I ask. So ask question, take notes, right? And some of your question might not get answered here, maybe because of time, right? But reach out privately, right? We could talk about it, right? And then I'll see how to help. But by way of introduction, them already did that, but I'm James. If you don't know me, should I say one of the possibly the youngest millionaire in the TMP community, and one of the youngest in my country, right? You're not gonna tell from my Instagram if you follow me on Instagram, because I don't roll like that. But I'm one of the youngest millionaire in my country. If there is any other person in my age range who has made 7 figures, right? But that is not the most important thing to discuss here right now. The most important thing to discuss here right now is how I was able to achieve that, how I was able to hit that 7-figure floor, right? Especially with a 9 to 5, right? Not just a 9 to 5, but 2 9 to 5, right? So we're going to dive deep into that. I'm going to tell you everything that I did, I'm still doing, and how you can use those same information, right, to your benefit. But before I go any further, this is just a disclaimer. There is nothing in this session that is going to be a financial advice. Everything I'm going to say here is going to be strictly for educational purpose only, right? And the best way to use this information is to be able to take whatever I say, go ahead and back test it, right? Tweak it to the way that best fits you as a trader, as an individual, and see how you can use it to benefit your trading account, to benefit you as a trader, right? Everything I'm gonna say here is not just pertaining to swing trading. It applies to all walks of trading, from swing trading to day trading to scalping, right? To lead trading. So if you take notes and you ask some elevating questions, you are most definitely going to leave here not the same, right? We all in here are already a better trader, believe it or not, right? But not to take any of your time, because I really want to go through this slides real quick so we can have more time for in detail explanation on charts and then some Q&A, because we have a lot of people in here tonight, right? Than the previous 2 nights. So I want to create more time for each and every one of you to be able to ask questions. So in doing so, I'm going to go through the PowerPoint slides first, right? Before I start taking questions. If I stopped at a certain point within my PowerPoint slides to ask to take a questions or to ask if you guys have any question, that means that particular slide is very important, and I expect some questions, right? So, but as I go through the slides, if I don't stop, that means I'm not prepared to take questions until I'm done with the slide. So, whatever questions you have, write it down. At the end of the presentation, you're gonna ask your questions, and we're definitely gonna go through it, right? And hopefully, you can get value out of every answer that will be given, and then pay attention to the chat also. Right, I'm not the only person here. You got Dan, you got Tula, you got Tavano in here tonight. The three of them are going to be dropping a lot of gems in the chat, right? So pay attention to it, take notes, right? Because this is recorded. But after this session and you receive the recording, you are now going to have access to the notes these guys are going to be dropping within the chat. So if you see some key points that they drop that you can relate to, that you love, and you think can help you, take notes. Whether it can help you or not, whether you love it or not, go ahead and take notes, right? So not to waste any time, I'll go straight into my PowerPoint slides, right? Let me share my screen. So put a 1 in the chat if you can see my screen. If you can see my screen, put a 1 in the chat. All right, okay. Everybody can see my screen. All right. So I would like to start with firstly saying I want to thank every one of you guys for being here. I appreciate you all for being here. This means a lot to me, right? Thank you for wanting to invest in yourself. Thank you for wanting to see something better come out of your trading journey. Thank you for taking a step to be able to seek more in knowledge, right? So I would say thank you for rocking with me, right? Like them always said, you could have chosen anywhere to be at this time, but you chose here, right? So I appreciate y'all. I appreciate y'all for being here, right? So with no further ado, we go straight into the slide. So swing trading, this is the topic for today. So this is just our table of contents, some of the things we're going to discuss today, right? We're going to go through my definition of swing trading and the general definition of swing trading, and then why I chose swing trading, right? And then we're going to go through the mindset. I'll take a pause right here. And I say the mindset, and I take a pause because this is one of the most important part of this entire session. If not the most important part of the entire session, the mindset of a swing trader. But I'm going to remove the swing and just say trader, the mindset of a trader, right? I will tell you why I took a pause here to just give a little emphasis, but I'll move forward, right? We're going to go over building a watch list for swing trading, building a watch list for trading in general, understanding market structure of trending phase, supply and demand, price and congestion. Supply and demand, we're just going to have a brief explanation, right? But we're going to talk more about price congestion, range, right? Consolidation, because that's exactly what I trade on higher time frames. And then we're going to talk about entries and exits, and then journaling, backtesting. They're going to do some chart. We're going to go into the charts to see everything on the charts, and then do some Q&A, right? So pay attention, take some notes, write the question down. Even when I'm not taking questions, write the question down and ask the questions. I don't mind going back to a slide if you ask a question about a slide, right? But just have question written down. You pay for this. You deserve to ask questions, right? Only thing I'm going to say is we're going to give other people a chance to ask questions. We're not going to allow one person to take the floor for 20, 30 minutes, right? So ask questions, ask more elevating questions, right? You deserve to ask questions. That's what you pay for. That's what you're here for. But please, let's respect others that have they respect time, right? So we go straight in details, right? So swing trading, as you all already know what exactly swing trading is. Swing trading is basically you buying more time, right? Swing trading is basically you, I would like to put it this way, you buying yourself some time, you buying your freedom. I mean, like you taking back your freedom, you reclaiming it, like this is mine. And the reason why I use the word freedom, because that's how I refer, that's how I see it to be, right? I use the word freedom because that's what swing trading has helped me do. Like now I don't need to sit and watch the chart all day. 1 second. Let me drink water real quick. Okay, so I do not need to sit and watch the chart all day. There are days that I do that. There are days that I don't. But the days that I don't sit and watch the chart all day are more than the days that I sit and watch the chart all day. But before I even go deep into what swing trading is, why I chose it, the first thing I'm going to say to you is swing trading is not better than day trading. Swing trading is not better than scalping. Swing trading is not better than leap trading. It is not better than buying shares. This is what I chose based on my trading identity. I mean, based on my, let's say, my trading goal, what I want to achieve, what I want to trade. This is what I chose. So for me, this is what works for me. But what works for me doesn't mean it's better than day trading, scalping, or lead trading, or just buying shares. So I want to get that out of the way, right? So I'm not going to sit here and let you know you should forget about day trading and swing trading. No. We both have sat in the group chat and see our billionaire brother Tavano made 6-7 figure, like $500,000 in a single day from day trading. We have seen Madison make 5-6 figure, right, from swing trading in a week, in a day. I mean, from scalping in a day, right? So every different trading strategies are all unique in its own way. You just have to find what works for you, build your system around that, and you go ahead and see how best you can make use of it. And for me, that's what I've done. Do I day trade? Yes. Do I scalp? Yes. Do I leap trade? Yes. Do I buy shares? Yes. But what I do prefer is swing trading. And I will tell you why. Why I prefer swing trading. Like I said, swing trading is buying more time. It could be 2 day to expiration, 1 day to expiration, weekly contracts, a month out, 2 or 3 months out. The reason why I prefer swing trading is because I spend less time trading and more time on other things that I desire. For example, I might not be on my computer looking at a chart of SPS or ES for 4, 5, or 6 hours in the trading day, but I might be on my computer reading about how the CPI could affect the market, how the FOMC could affect the market. I am still progressing, right? I'm still in the market. I'm still watching the market, but I'm not just looking at charts. I'm still expanding my knowledge, right? So I love swing trading because, and I do swing trading because I have always dreamed about buying my time so I can do other things that I desire that really matters to me. And this is not just about trading. For example, I'm in Africa right now. I came here for a vacation and I came here to also do work because, like, outside of trading, all of my other sources of income, like 90% of what I earn outside of trading comes right back from here, right? So I came here to check everything that I do and how it's going, right? I'm here, I'm still making money. I made over 6 figures the first week in January, and I traded for less than 6 hours, right? I traded for less than 6 hours. That means I traded for less than a day. If I can like kind of like add all of the hours or minutes that I spend trading every given day, the first week in January and divide by the actual trading day, I traded for less than 6 hours, right? I did the math today, it was like around 5 hours, I think 5 hours, 43 to 48 minutes, right? That's why I swing trade. I swing traded. I should have just said swing traded, but I traded first week in January this year. I made over 6 figures while doing other things that I love, doing other things that matters more to me, doing other things that I desire. And I still made money. So that's why I chose swing trade, because it gave me more time to do other things and less time just sitting watching the chart. Sitting and watching the chart is not a bad thing. But for what I want to achieve, why I wanted to swing trade, that doesn't meet my criteria. That's why I love swing trading, spend less time trading and more time on the things that I desire, right? And then why I love swing trading is also when you are on the right side of the trade, there's a higher possibility of a larger profit trade with smaller position size than day trading or scalping. An example will be if you are on the right side of the trade and there's a gap in price overnight in favor of the position, right? You are going to wake up with way more profit, right? Than the person who tried to scalp at open, right? But with less contracts. You can buy 5 contracts a day before, and if price gapped, I'm saying if because that's trading right there for you. There is nothing guaranteed. Because you're taking a swing trading class right now, it doesn't mean you're going to wake up every single day to 6 figures. No, or 5 figures. No. Can you do that? Possibly, right? But you can buy 5 contracts. You can buy 10 contracts a day before. And if price gapped up in your favor, in favor of the position, you can wake up the next day with a lot of bags, a lot of money, not bags, but truckload. You guys have seen it. I've had a 30-second day in the market, and I posted profits of $168,000 in the group chat. I've had a 5 minutes day from trade that I took before, 2-3 days before, and I posted profits of over $232,000 in the group chat. I've had a 1 hour to 2 hours day from trade that I took a week before, right? And I benefited from the FOMC and CPI move, and I posted profit of up $332,000 within an hour, right? I didn't spend just an hour on that trade. I took that trade for a week out. I took the trade days before, right? And I was able to make that much money. Okay, so that's why I love swing trading. I'm spending less time watching the trade. I'm putting less money because I'm buying time, not just because I'm buying time, but because I'm catching the move at the right time, right? That's one. And I'm buying the exact amount of contracts that I want to buy based on my risk management system and position sizing. And once price gapped up in my favor, I'm making more profits, right? So that's why I love swing trading, right? You can raise a little bit of capital, and if price gapped up in your favor overnight or during the day, you make way more money, right? Okay, so like I said, right here, benefits from overnight gaps in price. That's why I love swing trading. That's one reason why I love swing trading. So we're going to go over this in detail on the charts, right? But that's just one reason why, few reasons why I love swing trading. Okay. So the mindset of a swing trader. This is one. This first slide was all about what is swing trading and why I love swing trading. Why do you love swing trading is something you have to define by yourself. Why do you want to swing trade? But before, not to go too deep into why I love it, because it's just going to be about me talking about myself, right? I want to give chance where you can be able to talk about yourself, ask some questions about yourself. So to the next slide, right? Mindset of a swing trader. I want you to pay keen attention to this, because this particular slide is not just about swing trading. This slide and this slide is about journaling and back testing. It's not just about swing trading. It's about Swing is about trading in general. It's about investing in general in the stock market, right? So firstly, to get in the right mindset of a swing trader or a trader, you firstly have to ask yourself, why am I swing trading? Or why am I trading? And what am I trying to achieve from swing trading? Or what am I trying to achieve from trading? If you already know why you are trading and what you are trying to achieve from trading, or why you want to swing trade and what you want to achieve from swing trading, if you already know the answer to those two questions, put a 1 in the chat. If you do not know, put a 2 in the chat. If you just sign up for this session, hoping that you can find something that works for you, real quick, just be honest. If you know why you want to swing trade and what you're trying to achieve from swing trading, put a 1 in the chat. If you're done, put a 2 in the chat. Okay, I see a lot of ones. Okay. Okay. All right, so a lot of ones. So that means everybody know what they want to achieve from swing trading. Everybody know why they are swing trading. That's good, right? Okay. So for me, why I chose swing trading, I already told you guys, I wanted to buy back my time. I needed freedom. That's one. What did I want to achieve from swing trading? I just said it, more freedom. Why am I swing trading? I needed freedom. What did I want to achieve? I wanted, like, not just freedom, but financial freedom. Freedom to be able to focus on my health, freedom to be able to focus on other businesses, freedom to be able to focus on other investments, freedom to be able to learn more about the market based on fundamentals, economic events, right? Because if I'm just focusing on the technical aspect, there are a lot of things I'll be leaving out the door, right? So I want to be able to learn almost everything that I can learn, everything that I need to learn. So because of that, I need to buy myself time. And how do I buy myself time? Is learn a strategy, which is swing trading, that will give me more time on things that I need to learn, things that I need to study about myself, about my life, about my other businesses, about trading, about the stock market in general. So because I'm not spending 6 hours watching the stock market, I mean, watching the chart, that means, or watching the trade, that means I got, if I spend 2 hours trading, if I spend 5 minutes trading today, that means I took a trade 2-3 days ago or a day ago, and I was able to cash out 5 minutes of market opening tomorrow. That means I got 6 hours and 6 hours and 25 minutes left to study the market, to study price movement, to study fundamentals, to study the news, to study which stock to buy from a long-term account. So I needed freedom to do things that I really need to be doing. That's why I chose swing trading. Okay, so but swing trading requires patience. Yes, I know you already have your goal. Why you want to swing trade and what do you want to achieve from swing trading? You already have that, right? Do you have the patience to wait for that goal to come into reality, for that dream to come into reality? Do you have the patience to wait for your setup to plays out in front of your eyes and you take the trade or you take your profit? Do you have the patience? Because you need to have the patience. Patience with trading in general is not holding on to a trade and hoping that it does what you want it to do. Patience is knowing that this is my plan that I already have. This is my predefined risk. This is my precise position size. And I already have it set up, waiting for the stock to get here so I can take the trade. If it doesn't get here, I'm not taking the trade, or I'm already in the trade, right? This is my stop. This is my profit target, right? I'm going to sit and wait to see if the stock hits my stop, so stopping out of trade, or if it's going to hit my profit target so I can take profits, right? So you need to have that patience. If you don't have that patience, it makes things way more difficult. So that's one. We're going to go into that on chart, right? And then swing trading requires discipline to stick to your plan. Your goal is, I mean, you already have your goal on why you want to swing trade and what you want to achieve from swing trading. This is my next questions, right? Swing trading requires discipline to stick to your plan. What is your plan? Do you already have a plan to achieve this goal that you have from the first question? Do you already have a plan? Do you already have the discipline to stick to that plan? If you do, put a 1 in the chat. If you don't, if you are trying to build up a plan to achieve your goals from trading in general or swing trading, if you are just about to start building that plan right now, put a 1 in the chat. If you do not have a plan at all, put a 2 in the chat. Okay, 1. So everybody already have a plan, right? Okay, you already have a plan on how you're going to achieve what you want to achieve from swing trading or from trading in general. Okay. And then swing trading requires a position or precise position size and a consistent risk management system. Swing trading requires a precise and consistent risk management system. And it also requires a precise and consistent position size based on your account size, right? Or precise and consistent risk management system. Now, I need you to also put a 1 in the chat. If you have a risk management system that you use consistently, that you do not do away from, like that means you wake up every day, you have a risk management system, you have a stop that you always use no matter what the market condition is. You have a private target or based on percentage or manual levels. And you also have a precise position size that you use. That means how many contracts you buy. Put a 1 in the chat if you already have these plans mapped out. If you don't, put a 2 in the chat. 2, 2, 1, 2. There are some 2s, a lot of 2s, and there are some 1s. All right, there are some 2s, there are some 1s. Okay. All right, so those who said they already have a plan that is stick with, that means you already have a risk management system to protect you from losing too much money and to also help you to make so much money. All right. And then you say you already have a precise position size that you use consistently, currently based on your account size, no matter the market condition, right? No matter the kind of trade you're taking. So if anybody can share, right? Just type it in the chat also. To those who type in 1 that already have the plan, the risk management system in the position size, to those who already have it, just type in the chart, how many contracts do you buy on every given trade without it changing? If you do not have a specific, just one number that you buy on every given trade without it changing, do not type anything, just put 2. Just type in how many contracts do you buy on every given trade? 1 contracts, someone that said 4. Someone said 20%. All right, so I'll get to you, Ben, on what you mean by 20%. So 20% of the account size, that's what you use. All right. Okay, so the reason I'm asking this question, right, because this is where most of the mental and psychological breakdown in trading comes about. You tend to react emotionally to a certain trade you are in when you have raised so much money, when you have so much money on the table on a particular trade. The more money you have on a particular trade, on a single trade, the more emotional attached you become to that particular trade. And once you become emotionally attached to that trade negatively, now you do not give the trade rooms to run. You do not give the trade rooms to, like, you do not leave runners, or you do not give the runners more rooms to run, or you do not even give your stop the chance to see if it can protect you from a bigger loss. You caught your losses too soon without the stop being hit, and the stock bounce and it starts to go back in your favor, and then you are mad, right? So that's why you need to have your swing trading risk management or your trading risk management system and your position size that you stick with. Like Ben said, he used 20% of his account. I think we talked about that before, he and I use a percentage of my account based on my account size. So if I traded tomorrow and I make $100,000 in profits, my account size just increased. 20% of $200,000 account tomorrow, it won't be the same 20% if I'm trading a $300,000 account, because my profit just increased from yesterday, right? So it's different. So that for me, that's how I kind of like set my positions up based on my account size. I use a percentage of how much money I have available in my account to take or trade on any given trade. Okay. So the reason why I said mindset of a trader in general is important, because for me, that's where I struggle. A lot of us, almost everybody in here, once you're in the mentorship, you have DEM level to your exposure, you have Tavano level, you have his analysis, you have DEM level in his analysis, you have Tola levels and his analysis. So all these three guys are sharing that levels, that charts, the analysis in the group chat every single day, unless they are not present. But even while they are sharing that level, sharing their analysis, put a 1 in the chat also if you are still struggling with consistency, with consistently making profits, with consistently cutting your losses. While they are sharing the levels, sharing that chart and everything in the chat, they are sharing that analysis. Put a 1 in the chat if you are still struggling with consistency. All right. So there are a lot of ones. So here's the thing. The same level that Dan will share in the chat that he makes profit from, the same level Tavana share in the chat that he made profit from, the same level Tola share in the chat that he makes profit from, the same level Madison share, the same level that I share that I made profit from, are the same level that I'm giving within the chart that you are taking trade off of, possibly, or you use your own level sometimes, and you are still struggling with consistency. The same level that I use, or any of these guys use to create consistent results, are the same levels they are sharing, and you are taking trade off of those, but you are still struggling with consistency. That should tell you that your chart might not be the only problem. It should also tell you that your account size might not be the only problem. What that should tell you is maybe the way you think about what they post, the way you view what they share, the way you react to the information they give, the way you are mentally controlling the kind of information you are putting within your mind might be some of the problems. Because if they are giving you the same levels that they are taking trades up and consistently making profit, there should be no reason why you're using that same level and not making profits. So how do you go from using that level and not making profit to using those levels and knowing how to use your own levels and make profits? First of all, you have to work on your mindset. How do you think about trading? What exactly is trading to you? Is it a place where you just wake up at like 9:30 or 9:25 every morning, brush your teeth, wash your face, sit in front of your computer and hope that you make money? Or is it a place where you are taking your time to grind overnight, to grind when the market closes, to study, to work on your mentor, and you are not just hoping, but you are working towards being consistently profitable? Because your view, your definition for trading, your view on trading, the way you look at trading, the way you react to trading, will definitely determine the kind of result that you get. This is not a get rich quick scheme, right? Or a get rich quick kind of thing. I know a lot of folks might think, but yeah, you did it in 3 months. Devon did it in 8 months. Yeah, but Dan just told you that I did 3 1-on-1 with him. Actually, it wasn't 3, it was 4, because I remember he had a session where you can join with somebody and you book one session together, and then y'all can go ahead and share the information. You do 1-on-1 or 2-on-1. So it was actually 4, because I did a session with one girl, and then so we were 3, them, myself, and another girl. We both paid money together, and then we were able to tap into it. So that was 4 sessions. I did 4 sessions back to back, getting the same information. You know why? Because I want a different result. The reason why your trading account looks like the way it looks right now is because what you already know. It's about the way you already reacting to your trades. It's about the way you are already taking your trades. So if the way your account look right now is not pleasant to you, it's not okay, you need something different, you need something better, that means you have to change the way you are doing things right now. And the way you are doing things right now might not just be all technicals. It might also be fundamentals. It might also be psychological. My psychology when it comes to trading is where I struggle a lot before I started being consistently profitable. What helped me was Mark Douglas, Trading in the Zone. And then he had a whole lot of webinar on YouTube that he did with some of the Wall Street traders. Mark Douglas, he got a book called Trading in the Zone. The same effort you put into reading VPA to know how volume works, put that same effort into reading Trading in the Zone or any psychologically good trading book that you can read. Because if you have all the right levels, but you are mentally not present, you are mentally not fit to react to those levels, you are just going to sit and watch your move plays out right in front of your eyes and still not make money. Or you're going to sit and hope that the move you are already in do exactly what you wanted to do, and it doesn't do what you wanted to do, and you're still losing money. If you have the right levels, the right chart, but you psychologically you are lacking, it's just gonna like cause you to be a more aggressive loser when it comes to trading, right? If you have the right psychology, but not the right levels, not the right technical aspect of trading, you are going to be a more calm, relaxed, and comfortable loser because now you have control over your mind, but you are still losing. There are something missing. So that's why both of them they are important, but I put more emphasis on the psychological aspect because the psychological aspect will let you know that this is the right time to calm yourself down and take the trade. That is if you have control over your mind. I'm taking too long on this particular slide because this is the more important slide for, in my opinion, within anything that I'm going to say with you right now. Right? I want to share my chart link with you guys before the end of this session. Right? But even if I do, and you are now psychologically inclined when it comes to trading, to take the trade, to exit the trade, to take your loss, to take your profit, that is still not going to help you. It's not going to help you. Right? So psychologically, you might need to do some like more work. The mindsets, the emotional control, emotional intelligence of trading is as important as learning how to chart supply and demand. Way more important, I would say. Right? It's way more important than learning how to chart AOV. It's way more important learning how to want to make profits. If you don't believe that, right, but you are still struggling with consistency, take a look at your account statements. It will tell you. Take a look at how many times you have seen the trade you wanted to take come and it came to your level, did exactly what you wanted to do, but you still didn't take the trade because you were afraid. How many times have you been in a winning trade up of 50 to 100%? You didn't take profit and that trade went negative. How many times? Put in a one in the chart if you have done that before. You was in profit, you didn't take profit, and the trade went negative. There should be a whole lot of one right now because even me, I want to put one in the chart because I've done that before. Okay, how many times, right, have you waited for the chart, the stock to come to your entry? It came to your entry, you didn't take the trade. Put a one in the chat. You didn't take the trade because you were afraid it was going to do something different, that it was going to keep dropping or keep running up. Exactly. So at that moment, your problem wasn't technicals. Your problem wasn't volume. Your problem wasn't the size of your account. Your problem was psychological. Your problem was either fear. That's why you didn't take the trade. Your problem was greed. That's why you didn't take your profits. Greed that you was greedy that it might keep going up, so you didn't take your profit and it went to zero. I could keep going on back and back and back and back when it comes to trading psychology, but we have other things to discuss, so I'm not going to stay on this. But does anybody in here have any question when it comes to the mindset of trading in general, like the psychological aspect of trading, swing trading or day trading, scalping, whatever? Anybody have any question they want to say? I'm going to take 2 questions from this particular slide. If there's no question, I'll move on to the next slide. Does anybody have questions on the psychological aspect of trading? If you do, you just raise your hands. or put a one in the chat, and I'll come to you and unmute you so you can ask. Okay, so I'm not seeing anyone. I'm not seeing.
Please ask any questions that you guys have about the psychological aspect of trading, anything mental, anything you're looking to overcome, any hurdles you have. Now is the time to ask.
The risk management aspect. Okay, so what about risk management, Ben? Do you want to come off mute? Should I unmute you? Let me come to you, man.
Yeah, I just unmuted him. Come on, Ben.
Good evening, everybody. For me, just if you're talking long term, what is your risk management profile that you work with? Or what percentage, or is the price point, depending on is it based on the level that may help with getting over that hump of fear and thinking that the price might go that way. Again, we've learned from TMP is to assess the risk management and the risk and reward. So what is your concept if you swing trade months out?
So with risk management, right? I don't tell people my exact percentage amount or risk management. One thing that I always first emphasis on is make sure you are buying contracts that is not going to hurt your account if it goes to zero. But with risk management, with what I do particularly, like my percentage and stuff, like I said, it based on the size of my account. And now I'm not going to tell you the size of my account, right? That's a private information, right? I'm not going to tell you I have $1 million account I'm trading with. That's a private information. I'm not going to tell you I got a 500,000 account. So if I'm going to tell you, I'm buying 50 contracts, 100 contracts, all I'm going to tell you is I'm using 20% of my account on any given day to trade. I'm not going above that, right? There are days where my account is about $200,000-300,000. I'm using 20% of that to trade, right? Am I putting all in one trade? No. All I'm saying is I have 20% of that amount sitting down. That means if that 20% goes to zero, it will be a negligence on my part. It's gonna be something that I shouldn't have done, but I am waiting to live with that trade, that entire trade going to zero, which means since I've already set it in my mind that if the trade go to zero, that's it, that's fine. I have more emotional control over that trade than that trade having to control me. Right? I am able to control the trade instead of the trade controlling me. Because I have 20% of my account that I'm willing to put into any given trade, that means I have 20% that I can use to buy whatever amount of contracts that I want to buy. If I want to buy 150 contracts, and 150 contracts are going to take me into 25% of my account, then that means I have to cut 150 contracts down. If I want to buy 50, but the 50 is going to take me into 30% of my account, that means I have to cut the 50 down. If the amount of contracts I want to buy is not within the 20% mark or less, that means I cannot buy those amount of contracts. And the reason I'm doing that because the less money you have in a specific trade, in a particular trade, the more you become psychologically inclined, the more you become like mentally intelligent to be able to control that trade. The more money you have, right? The more money you have in a particular trade, if you are risking a half of your account on any given trade, you're going to sweat while in that trade. Because if anything goes wrong, you just blow up 50% of your account. If you got 40, you got 60% of your account in just a single trade. If it goes wrong, you are going to sweat because you just blew out like more than half of your account. Right? So what do? Right? I have a percentage amount that I use, right? On any given day, I know I'm going to use between 10 to 5% of my account to trade, not on a single trade, but I'm using 10 to 20% of my account on every given day. I mean, on any given day to trade. I'm not using 10 to 20%. I'm not using 20% on one trade. I'm using 10 to 20% on any given day to trade that I need to take a trade, that I have a trade that I want to take. Right? And how much am I willing to lose for that 20%? Right? I'm willing to lose nothing more than 25. The maximum is 30% from that 20%. So if 20% of my account on a given day is $20,000, and I'm willing to lose $20,000, I mean 20% or 25% of $20,000 on any given trade, That means I'm going to lose how much? I think it's $2,500 if I'm using 25%. If I'm using 30%, that's $3,000.
So you mind if I jump in real quick, bro?
Go ahead.
All right. So Ben, whatever you divide your account by, so let's say you divide it by 5, right? You divide your account by 5, use 20%. All right. So with the 20 to 30% max stop loss, your overall account would only be down like 4 to 5%. Now you gotta ask yourself, am I okay with losing 4 to 5% on my account on this trade? If not, just split that amount up even further. So you may divide that amount into 6, or you may divide that amount into 10, right? So if you have a $5,000 account, you divide that into 10, right? That's 500. So now if you do a 20% of 500 is what? That's $100. All right. So ask myself, am I okay with losing? I have a $5,000 account. Am I okay with losing 100? Cool. I know that what my max stop loss is on top of how much I'm putting into every trade. And if I'm okay with that, then I'm comfortable taking that trade as long as setup is there, the risk to reward is there, and everything makes sense. So does that make sense?
First, Ben, is she unmuted still?
Makes perfect sense.
Okay.
Okay. So no more than 5% or so. You should not be losing more than like 5 to 6 or so percent like that on one trade. All right.
All right. And then because you have that much control over your account size and trades you're going to take, it makes you less emotional. We are going to have emotion on any given trade. Your emotion can be joy, it can be happiness, right? It can be excitement, right? It can also be sadness, it can be greed, it can be fear, right? We are always going to have emotion, right? But the more control you have over your risk management system and the size of your account, the less negative emotions you're going to experience. That makes you to trade freely without stress, without having a sweat, right? All right, so there are a few questions in the chat. So I'll start with Tola. Tola first said how to stay confident or advised to moving out of your way when trades go against you. How to get best timing and high entry to consistently win it. Someone who purchased asked, okay. He said how to stay confident or advised on moving out of your way. So first of all, if you are struggling with your confidence or staying confident after, I think you said after, just give me a minute. Let me go over the question once more. How to stay confident or advised on moving out of your way. So one way, like one thing that I would do when it comes to moving out of my way is firstly, I'm not overthinking it. I'm gonna make things and information as like I'm gonna put it in the most simplest way possible, right? Because if you start to overthink it, and then that means now you are complicating it. That means now you have too much information to kind of like digest to see which one makes sense. So to move out of my way, first of all, I'm going to move out of my head, right? I'm moving out of my head means I'm going to try see how best I can make the information as simple as possible, right? So that means I'm going to get out of every negative self-talk, every negative self-doubt, like every negative belief, right, about myself, my trading journey, and the trade that I want to take. If you are negatively influenced by yourself, by your own self-thought, right, you are already in your way before you even start trading. So one, I'm going to work on my mental, psychologically, right? That has nothing to do with just trading, but that also has way more to do with you as an individual, right? If you are an overthinker, that means you might have to be more of a long-term trader because you have to take time to think and digest information before you even take a trade. Because that's the kind of person you are. You're an overthinker. You think stuff too much, right? So one way to get, like, one thing I think you can do is to get out of your way is by being, like I said, not overthinking stuff, simplify it, right? Don't overcomplicate it, right? Don't go looking for every secret source that you think you can get, right? Find a setup, find a system that works for you. You trade it over a period of time and you see how that goes, but you don't want to do this strategy today, that strategy tomorrow. You should be switching strategy based on market movement, market structure, market environment. Not to be switching strategy because you think this is not working and this is not working. So you're looking for a secret strategy or secret source or magical source, right? So one way or the best way to move out of your way is first to get out of your head, stop overthinking stuff, simplify it as like put it the best way as possible as you can simplify it, right? And then once like when the trade go against you, right? That's just another trade. That's why you have a risk management system that's going to stop you out of the trade and make you not lose a whole lot of money. If my stop is at 20 or 25%, right, of that particular amount of money that I put in the trade, if I put $100 and I get stopped out, and I get stopped out at 20%, that means I lost $20 on that trade, which is not bad, right? Yes, it was a losing trade. You're not go all trades are not going to be a winning trade, but my stop was there to protect me, right? So I'm going to use my stop to protect me from losing over plus, right? So when my trade go against me, I'm not going to go ahead and just stay stuck and start thinking about what I did before. Because if you overthink stuff, one thing you're going to do is once the trade goes against you, the next trade, you're going to start thinking about what happened previously. Because that's what happens. If you don't simplify it, you're going to start thinking about what happened previously. But if you have a risk management system or risk management plan that you are using consistently and it's giving you results and you're sticking with it till it needs adjustments, if one trade goes against you, you're not going to like kind of like overthinking. You're not going to get in the way because now you know I still have my own same system in place. I'm going to take this trade, put my stop on, have my perfect target set. If it doesn't go my way, it doesn't go my way. It don't work. All right. Okay. How to get best timing and trade entry to consistently win it. We're going to talk about that on the chart. But one way to do that is taking low risk trade. Low risk trade is something we're going to talk about on the chart, right? So just look out for that. And then Ivana said, is there ever a time that you are swinging and you see where you should add more contracts? I would say every dang day, right? That you're swinging and you think I should add more contracts. But if you already got your contract at Pookie price, and now it's even though it's just 25% up or 30% up, you can buy more contracts, but with different strikes. You can go ahead and do that. But I see that too many times, but I don't like to do that because I don't do good under stress. I don't do good when I'm down emotionally, right? So I try to do everything in my possible best that will keep me from making decisions that will push me under stress, where now I have to work under stress. So one way I do that is not taking too many trades. One is not risking too much money. Another way is not opening different positions at once. So if I'm already in a trade that is up a few percent and then market pullback, if the market pull back to my entry, but my stop is not hit, right? Then I can add more. But if the market is already, if my trade is already off 50, 100%, and the market pull back, well, I'm still off 50, 100%. I most often just leave my trade just like that. Okay. All right. So that will be it for questions on this slide. Now I move to the next slide. All right, so building swing trading watch list. My watch list consists of 7 stocks, but I trade only 3: SPY, QQQ, SPS. Well, I'm waiting for that future class from them and told out if you're in a mentorship. If you're not, go ahead and join, right? Because them both are coming with some fires on how to trade futures. Once that kicks in, then now I'm going to start trading ES. But for now, I trade SPY, QQQ, and SPS. I have Amazon, Google, Tesla, and Apple on my watch list because I use this to see how the market is moving, because Apple One or Amazon or Tesla alone can push the market in one direction that it wants the market to go. Apple alone can do the same thing. Apple alone can cause the market to pause and just range, right? Especially with SPY, with QQQ. So what I do is I have Apple, Amazon, Google, Tesla, right, on my watch list, and I'm watching how they move. I'm not looking to take a trade. More than 8 months now, only thing I trade is SPY, QQQ, SPS. I don't need anything else. I don't. So Like when you are building your watch list, you want to consider price movement and volume. You do not want to add stocks to your watch list that are not moving. They are just stock. Just stuck in one direction, right? They move $1 today and move $3 3 weeks later. No, you need stocks that are moving, right? There are stocks that move slow, but they are moving slow in one direction for one point in time, and then they change direction and move slowly into another direction at one point in time. That means you can buy more time and still profit when one direction changes, like Coca-Cola, right? Like Dollar Tree. These are stocks that move slow. They don't move 10, 15, 20 points in a day. But when they have set up to trend in one direction, they move slow. They're not moving $5, $6 in one day. But as they move, you are making profits, right? So you consider price movement and volume once adding stocks to your watch list. So for me, I know QQQ and all spot is gonna move anywhere between $3 to $5 or $10 on any given day, up or down. SPS is gonna move, or ES is gonna move, uh, let's say 10, 15, 25, 30, 50 to $100 up or down on any given day. Right? So with those type of price movement and the volume that comes along with it, once volume is in the market, I don't need anything else to trade. So that's my watch list. That's how I know my watch list. I'm looking at price, a stock that move with good volume and move with a huge spread. All right. And then understanding market structure, training phase. There are 4 different kind of market. We already know bull market, bear market, sideways market, volatile markets, right? We already know bull market is when stock is making 52 weeks high. Bear market is when stock is making 52 week low, like the one we are in right now. And the sideways market is when stock is in time of consolidation or range. And the volatile market is when stocks experience some sort of unpredictable or swift price movement, like when Jerome Powell is speaking or when there's an economic event, right? And you just see $50 shoot up from ES and then $50 shoot down. And you another $25 shoot up and $25 shoot down. That's a volatile market. That's the dream of a scalper right there. Supply and demand, price and congestion. Like I said, we're gonna go more over price congestion because that's what I use to swing trade. Supply and demand, I use it to day trade, but we are not talking day trading here right now. But if you want to learn more about supply and demand, there are videos in the TMP Premier Learning channel, or you can check out the video in the mentorship if you are in the mentorship. If not, go ahead and tap in. That's the best investment you can make on yourself this year. That's the best investment you can make on yourself this year. That's where everything changed for me. That's why I always talk about that. But yeah, so supply and demand, as you already know, supply is when demand is when great prices supply, exceed, right? When buyers are more than sellers and buyers push sellers up in price up, that's demand zone is created. And supply is when seller push price down and there are more sellers than buyers, right? So then a supply zone is created. So that's how supply and demand works. But then the movement between supply and demand, where prices just stuck within that, between supply and demand with no big move, no huge move, that's the range, that's the consolidation. That's why I love to trade. Right. So we'll go over that, right? And then talking about how to trade the congestion or the range, right? So price congestion, or you can call it support and resistance, is the sideways movement between a supply and the demand zones, right? The sideways movement between a supply and the demand zone is called congestion, right? And that congestion or that range comes with an area on within a range, or with the top and the bottom of the range called support and resistance. Well, for me, I call it top and bottom, ceiling and like ceilings and floor. Right? Okay. So a price congestion consists of a floor and a ceiling, support and resistance. A congestion is from after the first floor and ceiling gets created and price stays within these 2 levels. So if QQQ is trading or SPS is trading or SPY is trading between 385 and 390 for 3 weeks. That's a range. 385 is the floor, 390 is the ceiling. Once it stays between there, that's a range. That's a congestion level right there. It's in the face of congestion, right? Okay, so how do you trade that? We'll go over it on the chart, but how I trade the congestion is I wait for the first flow to get created. So let's say QQQ is moving from 300 and it comes down and stops to 385, it bounced. And it go to 395, it rejected. I'm waiting to see what happens at 385. If it gets to 385, it starts to reject, then I'm buying calls, especially when the rejection is with high volume, right? But I always love to wait for the first levels to get formed first. I do not take a trade when a new level is being created for the first time. If a new demand zone or new support zone or new resistance zone is being created for the first time, I'm not taking the trade. That's a high risk trade. I need a low rate, high probability trade. So I need to take a trade on a retest, which gives the trade more confluence. If you are just taking a trade on the first time a zone has been created, you can profit, right? But it becomes difficult to profit. You need low risk trade, not high risk trade. Okay. So entries and exits on supply and demand, all price congestion. Like I said, we're going to be talking about price congestion, right? The range, because that's what I used to swing trade, right? So for me, I have one rule. If my entries or exit or my stop signal isn't triggered, if it isn't hit, my stop level or my entry level or my profit target level isn't hit, I am not getting out of the trade or taking the trade. If my entry isn't hit, I'm not taking the trade. If my stop level or my profit target level isn't hit, I'm not getting out of the trade. And the reason why I have that rules is it is there to help me to maximize profit and cut my losses, and also help me to take trades and not chase, not FOMO into trades. Because if I'm waiting for my entry signal to hit and my entry signal doesn't hit, that means I'm not taking the trade. If it hits overnight, well, that's it. At least I was disciplined enough to stick to my plan, my strategy. Right? If I'm in a trade, and my stop isn't hit, but the price is about 25, 30, 40, 50% away from my entry, I adjust my stop. I secure some profit and adjust my stop. If my stop isn't hit on my remaining contracts, I'm not getting out of the trade. If my target for the remaining contract isn't hit, I'm not getting out of the trade. Okay. So, and then I go to the time frames. What time frames do I use? I use the 5 years monthly, right? To 5 days, 50 minutes. 5 days, 50 minutes is there because I use that for entries, right? But the chart for my swing trading, especially long swing, I'm using 4 hours and above. There are times that I come down to the 1 hour, but I'm coming down to the 1 hour to look for levels that could be roadblock to movement in, let's say, that could be roadblock to a position that I already have, right? But my charting, I'm charting from higher time frame, 4 hours and above. I learned that from them. I use that, it works for me. I go ahead and tweak it to the best way that works for me, that fits my trading system. You can go ahead and do the same thing also, right? Then, so not just with, I skipped this last, but with entry and exit, I'm also looking at my risk to reward. What's the risk to reward? I love 3 to 1. The least I'm gonna take is 2 to 1. If I cannot triple my money or double my money, it ain't worth the risk. I need to know that I can make profit before taking a trade, right? And then I also look for candlestick patterns and chart patterns at my entries and exit level. If the stock is at my exit levels and I still see a possibility of keep on going, right? To confirm the possibility, I go start looking for a candlestick and chart pattern that I use. Shooting star, doji indecision, hammer, double bottom, double top, triple bottom, triple top. I'm looking for all those like head and shoulders and all this other chart pattern I don't use because I don't know how to use it. I'm still learning. But the ones that I use are the one I'm going to share. Right. And then I'm looking at volume, right? And then, like I said, is the stock at a low risk or high risk level? To enter the trade, I'm looking to see if the stock is at a low risk or high risk level. To exit, I'm going to look also to see. Or high risk level on exit means you are in the trade at the level where the stock is that you should be getting out because the stock has done something contrary to what you needed to do. But you are still in the trade. That's high risk when it comes to exit. When it comes to exit, low risk is you are in the trade, but the stock is rejecting at a level. Let's say you are in the trade for 3 weeks and you took the trade based off of 4 hours or 1 hour and a 30 minutes time frame, but then you have a 5-minute supply zone that the stock is rejecting. That possibly just being formed for the first time, right? That's a low risk opportunity to stay in your trade and manage it properly. Okay, so journaling and back testing. Put a 1 in the chat if you journal before taking a trade sometimes, or you only journal after taking a trade. If you are journaling before taking a trade, put a 1 in the chat. If not, put a 2. If you only journal after taking a trade, put a 2. Okay. So all I want you to know is journaling is not just writing down the results of the trade you just took. Journaling can also be writing down what you're looking for, what you expect, how you feel before taking a specific trade. So I have some questions here that you can go ahead and screenshot, or you just wait when the video is processed and sent over to you. You can take a look at it. I have some questions here that you can type out, write down, and ask yourself before taking a trade and after taking a trade. You can document, you can journal your process to taking a trade. And you can also document or journal your process after taking a trade. Because some of the questions that I have here, if you ask yourself before taking a trade, right? And if you have the patience to make sure all of these answers to that questions are in check, if you have the patience to make sure everything is in check, you're going to take the trade and be less emotional, negatively emotional when it comes to the trade. For example, right? Documenting your entry signal, right? What type of entry signals was it? Or are you trying to buy off of? Are you trying to buy calls at demand? Or are you trying to buy puts at the break of demand and a low volume retest to buy puts? Are you trying to buy calls at support, or are you trying to buy puts once support is broken through, and then a low volume retest and a rejection of the buy puts? Or are you trying to buy puts at the rejection of supply, or are you trying to buy calls at the break of supply and the low volume retest of supply? What are you trying to do? These are questions you can ask yourself before taking the trade. When you are planning for your trade, you can do that at night or during pre-market. How do you feel about taking that entry? How are you feeling? The trade you are planning for Tuesday, how are you feeling about taking that trade once it plays out? If the stock gets to your entry, how are you feeling? So you can do that, write that questions and answer that question during pre-market. How are you feeling about taking a trade? You haven't taken the trade yet, but how are you feeling? What are your expectations of the outcome of the trade? What's the expectation? Expectation can start from risk versus reward, or it can go from what are you expecting? Are you expecting the trade to just run straight and give you 500%? Or you expecting the trade to goes up, pull back, goes up, pull back, goes up, pull back, making higher highs, higher lows, or lower high, lower lows? What do you expect? What's your expectation from the trade? Why did you choose that position size? How many contracts are you planning on buying? And why are you choosing that amount of contracts? If the answer to the reason why you're choosing the contracts isn't something like concrete and reasonable, then you can go ahead and rethink your decision, because it might be you are risking too much, that can cause you to be emotional, or you're risking too little, right? That can cause you to be greedy. Because if you risk too little and then the stock starts to do what you wanted to do, or even more, you start to be too greedy. You want to open a new position when you should be taking profits, right? Or if you risk too much, and then the stock starts to do the opposite, then you start to lose money, and you are just like beating yourself up. If I knew, I would have taken less position size. Right? So why did you choose that position size, or why are you choosing it? Ask yourself that question also. What is your initial stop loss plan if the trade moves against you? These are all questions you're asking yourself before you take the trade. What is your initial stop loss plan if the trade moves against you? Our stop loss is like insurance. We are hoping we have our stop loss, we have insurance for just in case we have accident, even though we do not want to have accidents. But if we do have accidents, we have something to back us up. That's a stop loss. So what is a stop loss plan? Are you planning on holding your stop at this level until you are stopped out, or adjusting it? If adjusting it, how are you planning on adjusting it? What are your profit target expectation on entry, or how do you plan to trail stop? So your profit target, what is the expectation? Do you want the stocks to get there, case it, and reject before you get out? Or do you want the stocks to get there, or before it even gets there, you are already scaling out? Document your exit signals on the chart. After it is closed, how did you feel when you took the trade or the exit price? Did you commit any errors of execution during the trade from entry to exit? Ask yourself that question, right? What could you have done differently to minimize the size if it was a losing trade? So what could you have done differently to reduce the size of your contracts? If that trade was a losing trade, what could you have done differently? Ask yourself that question, right? And if it was a winning trade, what could you have done differently to add more contracts? Ask yourself that question. If you have good answer for that you can justify technically, fundamentally, and you are psychologically ready to go ahead and make the necessary decision, go ahead and do that. Do you have any regrets about any stage of the trade, the size, your entry or your exit? That means the amount of contracts, your entry or exit. Do you have any regrets about any of the stages of the trade? If yes, what's the regrets? And what could you have done, or what can you do next time to make sure you don't have that regrets? If no, that's fine. Right? How difficult was the trade? Right? How difficult was the trade to execute during each step? Entry, exits, and stop. And then the position size. How difficult was it to execute during each step? How difficult was it for you to enter the trade? Did you have some type of fear when it was time to enter the trade? Did you have some type of how should I call it, FOMO, when it wasn't time to enter the trade, but you still felt the need to just enter the trade because it might go 300%, right? So how difficult was it to execute during each step? Were you having anxiety when it starts to move in your favor? So you caught too early and you left 500% on the table? Or did you allow your profit goes from green to red because you felt it could keep going on? Did you have faith in yourself to follow your trading plan? Ask yourself that question. If not, what are you doing wrong? Maybe you are buying way more contracts. That's why you don't have faith yet. Maybe you are risking too much. Did you have faith in your signal that leads to profitability over the long term from your system? Are you mentally, emotionally comfortable trading this time frame, this position size, this entry, this exit, this risk management system? Are you comfortable? Are you emotionally comfortable? That's the end of the slides, right? But before we move to the next steps, does anybody in here have a question about this journaling and backtesting questions? Is everything clear or not? Okay, so account size, account position, and size. What is the best amount to start with? Do you need 5K to start? No, you do not need 5K to start. You do not need 5K to start swing trading. I started with 5K because I wanted more comfortability. Like I said, I don't do well on the stretch. And I felt like trading with smarter money was going to like kind of like make me so stressful that when it comes, especially when it comes to taking profit. That's why I went 5K. But you can start swing trading with $500 to $1,000 to $1,500. You can start by buying 1 day to expiration, 2 day to expiration, or weeklies. You do not need 5K. Exactly. Them just saying you started with 500. What do you do to decide a contract? For example, you like in the money or out? Do Greeks affect your decision? I'm gonna be honest with you right here, right now, and let you know I haven't looked at Greeks in a long time. I haven't looked at Greeks in a long time. But then also, if you can charge your premiums, I'm not gonna say the Greeks don't matter, but if you know how to charge your premiums and read the premiums and see where it can go, you possibly don't have to look at Greeks. But that's something for I think for them. I think he can shed more light on that. That's Dam's thing, right? But what do I do to decide my contracts? I'm gonna go over that right now, right after here on charts and stuff like that. Based on this for the time market, are all your trade swings, day trade, or when your trade hits their targets. So no, not all my trades are swings. That's why I say you need to have patience, right? When it comes to taking your swing trade, because there are certain trades that I want to take so bad that I see the possibility that this can happen or not, right? And sometimes it takes me 2-3 days to take that trade. That means I took the trade today, it went up a little bit, and it started to reject a key level, and I see the possibility of a reversing. So what I did was I took profits and wait for it to retest my entry level, and then I buy more. Sometimes it don't retest my entry level to the next day, right? So all of my trades are not swings. I did trade, I scalp, and I swing when necessary. I'm not always swinging. I'm swinging when necessary. Right? Are you buying market or limit orders? I mostly use limit orders. I want to get it at the best price possible. Yeah, I want to get it at the best price possible. Limit orders get you filled real quick. If you're scalping, you're day trading, but if you're swinging, you don't have to worry about market orders. So I just have to be realistic on where it could go. Exactly right. Active trader, is active trader used in your trading strategy? If so, what trading parameters are you using? So because I'm swinging, I only use active trader when I'm day trading, when I'm scalping. I'm only using active trader when I'm day trading or scalping. I'm not using active trader to swing trade. I use active trader to scalp to day trade. I'm not using active trader to swing trade. Because with swing trading, I can set my orders and I see where my limit order is set, and then to get filled. If I don't get filled, that means the stock didn't come back to my entry. It didn't retest my entry, so I don't have to worry about that trade. So it can retest my entry, and it's necessary to take the trade. I'm not taking the trade, especially when I'm looking for a long swing. But if I'm day trading, I'm scalping. I'm using active trader. And then day trading and scalping with active trader. If that's something you really want to dive deep into, Tavano, Madison, them and Tola every night in the mentorship, these guys will be the best people to ask, right? Especially when it comes to day trading, day trading and scalping. But with swing trading, I'm not using active trader. Okay, are your stops mentor or you put a hard stop in? Sometimes my stop a mentor, sometimes I put a hard stop. But most often my mentor stop are stops that I have for longer swings. That means I need ES, if I'm trading SPY or SPS, I need ES to reclaim a key level, a major level before I can get out of the trade. Because sometimes your 25% stop can get hits and the stock can ES can bounce right out of major AOV or demand zone, right? That is way above your entry, and it starts to do something exactly what you needed to do. So most often my stop is a mentor, right? When I need ES to reclaim a very key level, especially when I'm long swinging. When I'm short swinging at 1 day to 2 days to expiration, I'm using hard stop. Long swinging 2-3 weeks out, I need a key. I need ES to reclaim a major level, a key level before I can get out the trade, right? And once that level is being hit, right? But sometimes I'm looking at the time. So if I'm in the trade for 2 weeks, right? But ES is ranging like right above that level isn't hit yet. We already know as time get closest, you already lose your contract's already losing value, right? So that's one. And number two, the fact that I'm not swinging my entire position, right? I really don't have to worry about it hard or the mental stuff. I worry more about the mental stuff. Is there any other questions, or I can move to the chart? Okay, when you swing trade, how do you determine how much time to buy on a contract? Also, you use seasonality to determine if you will buy a call or put. What time frame do you use to swing trade? Okay, so let me end this class and go straight to the chart. Save. All right. So to answer that question, swing trading is a strategy, but my charts that I use to swing trade is what I'm going to go through right here, right now. Like I said, I trade the congestion, I trade the range, right? So this is the daily time frame. And if you pay attention earlier, I said I do swing trade on higher time frames. I come down to the lower time frames to enter and confirm entry. I mean to enter, but I use the higher time frames. I use price action on the higher time frame to to confirm my entry. For example, this is the daily time frame, right? I showed this particular chart before. Look here. This is a range on the daily. This is a range on the daily. This is a range on the daily. This is a range, right? And then a range right here. We just broke out of a range on the daily, right? I'm gonna take this raise reward from there. All right. So we just broke out of a range on the daily. All right. If you take into consideration what Annie said in the book VPA, the law of cause and effect, that means the longer the consolidation or the range, the higher the time frames. Once the breaks out happen, the longer it will take the move to complete, or the longer the move will go. The smaller the move, the smaller the consolidation, the smaller the time frames, the more smaller the move is going to be. And we see that here a lot, right? We see a range for almost 2 trading weeks. When the stock breaks out of this range and then retested here, it made a low from, let's take a look, right? This is a 32.92 all the way to 38.09. That's about 400 plus point. I think close to 400 or 400 plus points move. The pressure shit. This is the transparency and this pressure. Okay. All right. So all right. So yeah, Tavano, you just need to look at it and you already see interest, right? So ES broke or ES created this range for 2 weeks, right? And then it broke out, it dropped almost 400 points, right? So this also validates what Anna said in the book. The higher the time frame, the longer the consolidation, the more significant the move is going to be once the breakout happens, right? We see that here, right? We see that here also. You range for let's say 1, 2, 3, 4, 5, 6, 7, 8, 9, like 2 trading weeks, and then once it dropped for another 1, 2, 3, 4, 5, 6, 7, like close to 2 trading weeks, right? So We range for 2 trading weeks. When we drop, we spend close to 2 trading weeks to drop before we can make a reversal. We range for up to 2 trading weeks. When we drop, we spend up to 2 trading weeks before we can make another low, then a reversal. We range here for 3 trading weeks, almost a month, right? When we break out, we spend almost a month running. So I'll go on a weekly to actually confirm this. All right, ES range here for 1, 2, 3. The 4th candle here is when it broke out, right? And then it retested before going up. So it range here for 4 weeks. The last week it break out and it spent 1, 2, 3. The 4th week rejected and it dropped. Right? So after the breaks out, after the range for almost a month, the run up came and lasted for almost a month. After the range for 3 weeks, the drop down came and lasted for 3 weeks. The 4th week, it reversed. After the range for 1, 2, the 3rd week, the run up came, it lasted for 1, 2, 3. The 3rd and the 4th weeks, it dropped. Now we got a range for 1 to 3 weeks. What do you think might happen? This is the breakout. Do we have another 1 or 2 weeks to keep running up, or we can reject? But then let me show you something, right? Let's see. All right, so let me go back to the daily. You are going to see this right here, TODC, and then a BODC. TODC stands for top of daily congestion. I mean, top of the daily range on the daily. And the BODC stands for bottom of a daily congestion. I mean, bottom of a daily range, right? All right. So for each time we create a range, I mark the top and then the bottom, right? Okay. And then look at what happens whenever we break out of a range and we retest. We always reject within the range and then we drop, right? After we drop, the stock came from another range here. This is the top. This long wick here, I don't consider this the top, right? But I consider this part of the range, right? Here, the bottom, and then a bottom, right? So you got a range of 3 weeks. The last 4 weeks makes it a month. Price broke out, retested the stop, and went up. So when ES went up, take a look at where did it stop and rejected after it breaks out of this area. This is the bottom of this congestion. It should have rejected this. It didn't reject this, but price went up. It rejected the top of this congestion right here. And it ranged, it stopped within this range. It created a range right above the bottom of this congestion, right? And then when it broke out, did you guys see where it stopped? It stopped at the top of this congestion that was created in April. And it stopped here in August, right? So you got April, May, June, July, August. So 5 months later, price still respected the top of this range. And after respecting the top of this range, price dropped. And where did it reject it? It rejected this range, this congestion right here. This 1, 2. If I draw a line from here all the way here at the bottom of this congestion, not considering the wick, you're going to see that price stopped right at the bottom of, like on the bottom of this congestion, right? I'll take this out. We're still going to talk about that. It rejected this, it went up and retested where? The top of this congestion right here again. Top of daily congestion, it rejected it, and then it dropped. And when it dropped, where did it stop? On the top of a daily congestion that was created from June to July, and it stopped. And went back and retested where? Top of another daily congestion that was created from July to August. And then it dropped. It paused for a little while, and then dropped. It created a low of the year, went back, retested this congestion zone, and then it dropped, created another low of the year. But after it dropped here, created a low of the year, this right here became support. Price went up, rejected. When it came, price never broke through this support. It wicked below it on the daily, but it never broke below it on the daily. This is when we get that big reversal from CPI. All right, I'm seeing some chat to say question. Okay, so all right, so now we have price going back up, right? after this retest. After price went, after we created a low of the year, price went up. What did price rejected? It rejected right here, top of this congestion that was created from June to July. It still rejected this, and then it retested and stopped in reverse where? The bottom of this congestion from June to July that was created. It retested, rejected, and then price went up. Then we form a range. Another thing you got to take into consideration, right? And now I will say this and then show it to you on the chart. Every change in trend or continuation of a trend always come from a place of congestion or consolidation. Example would be this. We have this big drop from here all the way here. And then we have this moved up. The continuation of this move came from where? It was created in this range right here, up, down, up, down, up, down. Do you know what this is? If anybody have an idea what exactly what's happening here, put it like, can you just type it in the chart? Type in the chat if you have an idea what's happening here. Wendy's, exactly. So, right, yeah, so Wendy's, all right. But what exactly was happening here was this, okay. Liquidity grab is not just a long wick that happen on the 1 minute or the 5 minutes. It's not just a long wick that happen at the bottom of the 1 to 5 minutes. Liquidity grab can take place. Sometimes liquidity can be created by market makers. It takes weeks for them to create liquidity. It takes weeks for them to load up their entire position. And it takes weeks for them to sell that entire position. Like here. Market makers were creating liquidity within this area for this trend to continue going up. Is this a question right here? Wendy's. Wendy's 2023, we gotta eat somewhere else. Right, okay, but so market makers was creating liquidity. The market makers right within the zone right here, they were loading up more contracts. I mean, not contracts, but they were loading up more shares to push price up. But they load up, came here to test the water to see if there are more buyers, load up more, test the water, see if there's more sellers. Seller wasn't sure enough to push the price to break below here, just like that. So they were creating liquidity for themselves here, but on a higher time frame. Right? So let's take this to the week to the monthly. So maybe we can see something clear. All right, on the monthly, you see we got a long wick rejection right here. We got a long wick rejection right here, right? So, and then right here also, you got a very long wick rejection right here. So somebody else might say this right is liquidity. This is somebody might say this is a doji candle indecision. So this looks like a liquidity graph, right? Especially when you look at it on the smaller time frame. But if you look at it on the daily, you just see price movement, you see your range. So there's a possibility market makers were just loading up more shares right here. So the continuation of this trend that started from here, the continuation of this trend came from out of this zone, out of this congestion zone, out of this range, right? Okay. We have how you call that? A continuation of this downtrend. Price drop, came and stop within the zone. Range, and then drop. The continuation of this trend came from right here. Okay. And it's the same thing with this right here. So every major price, every major change in price, every major trend continuation come out of a place of congestion or range. It don't always, but most likely, most often it do, right? Okay, so with that being said, you already have this zone marked here from April. And you see this being respected in August. You have this marked here from May. And you saw this being respected in August, right? In September. And then when? In December. So my question is, when price started to come up here, this was a CPI move, right? But you see where price rejected and then it dropped. All right, so now we have price just created a range. Market makers possibly filling up more orders, more shares to push price higher. Now price has broke out of this range. We've been in for 3 weeks. I think it was 3 weeks. Yeah, 3 weeks. We've been in a range for 3 weeks. From September, the week of September 19 to the week of January 2nd, we was in a range. Prices broke out. The last time we were in the 3-week range, right? It was here. Price went after it broke out of the range. Price went from 37.08 all the way here in another range to, let's say, 40.50, 37.08 to 40.50. That's about almost 400 points move. The last time we ranged for 1, 2, 3, and the 4 week we broke out. Price went from at the bottom of this range, 37.20, all the way up to 43.01. I'm not saying price can move from where it was 3,800 all the way up to 42.02. What I'm saying is, if it can happen, 5, 6, 7, 8 months ago, there's a possibility it can happen here. So how would you plan for a move like this? For me, I'm calculating how long, where did the stock just range? Okay, the stock range right here. Look at here. It ranged within the same levels as here, So this price has stopped within this particular zone that was created since June 1, 2, 3 times. It has retested this zone and get rejected, right? So I'm seeing price moving out of the same zone. The last time price came down to this area and stopped within these numbers and stopped, when it broke out of the zone, it ran up for almost a month and ran up almost 400, 500, 600 points. I'm seeing the same thing right here. So am I anticipating a 500, 600 points move? No, I can tell you that, but what I'm anticipating is that market can move, can continue to move to the next FOMC. Let me see, I got some stuff in the chart. Price memory. Oh, exactly, Tola. Anything is possible, right? Price has memories. So if it happened in June of last year, in August of last year, and it's happening here now, that means there's a possibility the same move we got from here can happen here. There's a possibility this stuff can reject right here at 40.84, because this is the bottom of a daily congestion that has been respected a lot of times, and it can get respected here again. All right, so okay, so will we be looking at the fat of the range getting smaller each time? The last one seems like a tighter range. So when you say the last one, Billy Bro, which one are you kind of like referring to? Come on, Tola. Last. All right, the last consideration, the space between bottom and top. So you want to come off mute and just identify that real quick. Can Tola or them, can any of you guys take Tivana off mute and just identify that real quick? Are you the one to consider for 3 weeks? So are you referring to this one right here? If so, just you can just type a 1 in the chart so I can know in the chat. Yes, the one we just broke out of. Okay. So, and then the question was, we be looking at the fat of the range getting smaller each time. The last one seems like a tighter range. So range has memories, I agree, but because, and something I always say also, because the last CPI move was 300 points, doesn't mean this CPI move had to be 300 points, right? Or because we had a quick drop, this CPI, and a quick reversal that same day of almost 200-300 points, doesn't mean we need to have the same thing. So because we had a range here for almost a month, for 3 weeks and a month it broke out, doesn't mean this range have to be uh between, so this is 37.20 to 38 to 39. This doesn't mean this really have to be 200 points move, right? But I understand what you're saying. Do we have to take into consideration that the range is getting smaller? Yeah, the range is getting smaller. You got to take into consideration the range is getting smaller because number one, the market is being moved by individuals like ourselves, but with bigger money, right? With bigger account, right? So sometimes they push price to a certain level to see if what did they hear before, or whoever pushed the price up from here before will be here, right? So there's a possibility we're going to see if they could play the same game between here, because if you look, this is the actual range, right? 39.17 to 37.20 or 37.18. So once price gets here and it's ranging within this, between these two levels, but it's not touching the bottom, it's not touching the top, but it's creating a different range, but within the same levels, right? That need to be taken into consideration. That means, yes, price do have some memories, but there's a possibility the move we have from here might not be the same move we have from here. That's why I'm not anticipating a move all the way up to 42.97. Mostly anticipating a move that can stop at the next bottom of daily congestion, right? Because if we take into consideration the law of cause and effect also, the move from here was huge, right? The range from here wasn't tight as compared to this, right? So that means there's a possibility that we have more people active within this price range, this price movement right here, than we have more people here. So there's a possibility whoever pushes price, whatever banks or whatever institution pushes price from here, might not be trading with the amount of liquidity, the amount of capital of funds that these guys that push the price from here are trading with. So this move might not go as high or last as long as this one did before. So yes, you got to take the range into the tighter space into consideration also, that yeah, anything can happen as price break out of the range, especially a very tight range. And then most often you got to take into you got to look at the fact that most of this range happened during the holiday season with less volume also. So do you think it will make a bigger move or a smaller move due to it being smaller? I don't think it will make a bigger move or a smaller move due to it being smaller. So based on the fact that this was a holiday season, less active trader within the market, right? On a very low volume, might have been a cause for this range being much smaller than this here, right? But also because the range is much smaller, I don't think that can be the reason why this move doesn't have it don't go as high as this one. Right now, if we have positive fundamentals on the economy, the overall economy of the US or the overall global economy, it can push price higher. And it won't matter how small this range was. It will have anything positive. If we have something negative, this can reverse as like ASP, right? So yes, the range is smaller, right? So that doesn't mean the price can go as high as this one go and last as long as this one go. But even though the range is smaller, but that doesn't also mean that the price cannot go as high as this one go. Like we are trader, right? Like them I would say, if not this, if this, then that, right? So you got to take into consideration that yes, this is a previous price action, previous price movement. That doesn't mean the same thing that plays out here or that plays out here have to place out here right now. But if it do, what are we going to do? So that's where you, as a trader, as an individual trader, comes into play. That's where your own thought process come into play. Your due diligence come into place. What will I do when this happens? See? Yeah. All right. So, any questions? Okay. So real quick, right, on how I choose my strike price before I forget about that. My strikes and my expiration, right? So now that we have FOMC, I think it's February 12th. Is it February 12th or February 8th, something like that? I don't know. I'm not sure. I don't know. Let me take a look at it real quick on my calendar. FOMC. That's FOMC. Next FOMC is going to be February 1st. Next FOMC. No, this is December. What's the next Fed rate hike? Yeah, February 1st, right? So we got next FOMC February 1st. So that's like 2 weeks, and I think 2 weeks or 2 weeks and a half from now. So if I'm planning a trade on a move here that from out of this range, if I was planning a trade, right, especially trading the top and the bottom of this range. This is another question. Let's consider a few things. The consolidation period, seasonality, big money that has been sitting on the sidelines. One, yo, go ahead and read into this chart and take note. Like I said, look through the chats and take notes. Right. I'll get back to what them just said to see if there's something I need to add there. But so look at this on the 4 hours, right? The first bottom was created. If you remember, I said you don't want to take the trade on the first bottom, especially when you're swing trading. The day trader or scalper, well, that's a move you can benefit from. Well, the first bottom was created. The first top was created. First bottom got respected. And then this is the second top, but it was created at a different level. So now taking a puts here might be risky, right? But you can profit from it, right? First top was created. And then bottom was still respected. And then we got a rejection and then pull back, and then the top was respected also. Just like that. So right within this range, you got, because we are not taking this, we want low risk trade. We got 1, we got 2, we got 3, we got 4 entries on calls. On puts, this was the first stop, and this is the first stop with below the first stop. So we got 1, right? I would say 1 and 2 entries for puts if you're looking at a 4-hour time frame. All right. So if you took calls at this level, right, based on the fact that there's an economic events coming up February 1st, I'm going to choose a strike price and expiration date that can go at least before or a week after or a few days after that Fed meeting, that FOMC. The reason why I would choose days before or after that FOMC or that Fed meeting is because I want to see if there's a possibility, whatever trade that, let's say my calls that I took from here, if this move right here will be the direction of FOMC on the day of FOMC. So if Fed comes out and says something positive that have the market to keep rallying and have been in the trade from down here, and so let's say market is around here, or let's say rejecting this level. Even if market is right here and ranging until Fed comes and speak, and I took the trade from here, I have already secured profits in my initial investments. Whatever I'm in up here is runners. You do not, right? If you are comfortable doing that, go ahead, but you do not want to swing your entire position, right? Because just how you can wake up to 50K worth of profit, $200,000 worth of profit, you can wake up being down zero. Being down like 50, 60, 70%. So I do not swing my entire profits, right? I secure profits, I secure my initial investment, and then swing runners. So if I have runners on the day of FOMC and then ES is already 200 points away from my entry within my favor, that means whatever happened on FOMC, that up and down movement is going to be affecting people that are just trying to take position and not me, because I've been in that trade 2-3 weeks before, right? 2-3 weeks before. So that range that happened on the day of FOMC is not going to be affecting me bigly because I've already secured my profits, secure my runners. Secure my profits, secure my initial investment, and I only have runners. Even if that runners go to zero, that means that trade is still not a losing trade because I have secured profits in my initial investment. The runners that I have, it goes to zero, is not a losing trade. But the fact that I have secured profits in initial investment, that means I have more control over what I trade now because I'm trading with money that I'm willing to let go of. So all the price movement is going to be happening up and down, up and down, up and down before or during FOMC. And based on the fact that I choose my expiration date for a week after FOMC, or the week of FOMC, or 3-4 days after FOMC, if price gapped up, if the Fed come and push up price away from my position, but within my inferior of my position, I'm going to profit with a huge sum, because I've been in that trade 2-3 weeks before Fed or before CPI, and then I was already up 200-400%, and then the Fed came, so the data came out and even pushed price higher than what I was already up in profit. So I choose my short based on economic event. That's one. I choose my price based on strategic date. One thing that I learned from them was the third Friday. I think it's every third Friday option expiration. That's something I learned from them, especially the quarterly, right? So I think it's OPEX. I think something like that, right? I don't remember, but he mentioned something about choosing your strike price or expiration date for every third Friday. So maybe then you can elaborate on that within the chat, get more confluence if necessary. But I like to choose my strike price and my expiration date based on fundamental economic events that can push price in favor of my position, or it might not. But just in case it do, I want to be able to profit huge sum, right? So I choose my strike price based on that. And I'm looking for the trade before the day of that event. I am not going to sit down on the eve of CPI before I'm looking for a trade for CPI and then I want to swing it. No. If CPI is February 1st and I'm already in this move right here, and I've secured profits right here in my initial investment right here, and then price because you already know at the break of the range, you got to retest. Now you retest it, price starts to go back up. If CPI comes out on Tuesday, for example, right, and price goes inferior of a position, that's a huge amount of profit. If it doesn't go inferior of a position, instead it drop, right? It's most definitely going to drop, and you're going to be at break even. You'll probably be down 20, 30, 40, 50% on your renders, especially when you was already up to 300%. I don't know, but I kind of feel like you people should be asking a question now. Are there any questions in there for me? Does anybody have something else they want me to talk about, or you want to share, or you want to ask any questions? Go ahead and ask the question. That's why we are here. Yeah. So walk us through how you multiply your account to 7 figures. Where did you enter? Where did you exit? That I'll be walking you through almost 3 to 6. I said 3 months of trading progress. So that means I gotta go back 8 to 9 months before and dig out every trade and do a recap right here. Is that possible? Yeah, but not on this call. I mean, if you want me to walk you through my system on what I did to multiply my account, which is what we're already doing here right now, but to walk you through on how I multiply my account to 7 figure, where did you enter? Where did you exit? Contrast size? Where did you stop out? That is not possible. Nah, that is not possible. That's basically, are you getting in the trade at a break of congestion? I can talk about that, but the thing is AG, walking through the process of multiplying my account is something that we are already doing. Everything that I did to multiply my account is what we're talking about here right now. I think I shared this before on one of the mentorship call where I said I made more money, I think, over my after my first 3 to 4 months of successfully swing trading with consistent profit than I made, or not 3 months, but 2 months of successfully swing trading, than I made
with my first 3 to 4 months of day trading and scalping, right? But say I should walk you through the entire process. Where did I enter? Where did I exit? That's a recap you are asking for. That's 3 months of recap you're asking for right there. Can I do that on the score right now? Nah. So if you're asking me, how do I enter? How do I exit my trade currently? If these are things you want to know, maybe that's something we can talk about. So what chart do you use to enter a trade? So what do you mean by what chart? You want to come off mute? And then Gigi said, yes, that's what I wanted to know also as well. So, okay, what time frame do I use to enter the trade? So like I said, I use the smaller time frame, 55 to 50 minutes to enter my trade, especially when I'm trading in range, right? But I use the 4 hours, the higher time frame to confirm that this range I'm trading, right? This 15 minutes trade or 5 minutes trade that I want to take right here, this entry, right? I want to use the 4 hour time frame to confirm that yes, buyer is actually in control over here. I want to use the daily to know that buyer is actually in control over here. But I'm going to use the smaller time frame to identify my entry signal, my double bottom, my double top, my triple bottom. But if I'm looking at this range, knowing this is a 3 weeks range, right? That if it breaks out, it can break out and last for 2-3 weeks, possibly. That means I cannot use just the 5 or 50 minutes to make my trading decision. I gotta use the 5 and 15 minutes to identify my entries, but then use the higher time frame to confirm what I'm seeing on the smaller time frame. Right. So I use the 5 and 15 to enter, but I'm using the 5 and 15 to identify candlestick pattern and chart patterns that I will use to take the trade. But I will use the higher time frame, 4 hours to daily, to confirm the move that I want to take is actually going to happen and be beneficiary to me. Okay. So 20 days. Okay, so right here, right? So this is Tuesday, price action right here. This is Wednesday, price action right here. So range, this is Thursday, price action right here. And this is Friday, price action right here. Okay. So now, if I'm on the 15 minutes, right? If I zoom in right here, I'm on the 50 minutes right here. I got a daily AOV right here at 38.33.68. And I have a support level right here at 38.19, right? That have been respected for almost a week now, right? So if I'm looking to take a trade, as I already told you, I'm going long at the bottom of the rejection of support, and I'm going short at rejection of supply, right? So that means, I'm coming, just give me a minute. So that means at this rejection level right here, which of course we have had 1, 2, and 3 times of this level, rejection at this level, and then we had the same thing over here, right? I'm going to start looking at grabbing calls. I'm going to grab calls because I already know that this is support, right? So a rejection at this support on the 5 or 15 minutes means I should take the trade. So if I'm looking for a double bottom rejection here, or a retest at this rejection right here to take the trade, or a retest and hold of this is the roundup. If I'm looking at a retest at this my daily AOV to take the trade, because this is a level that I've been having, I'm going to go on the 15 minutes to the 5 minutes, which is the 15 minutes right here, to see what exactly happened. And do you see how the stock ES communication right here? And do you also see how we got this long way rejection on the 15 minutes time frame at 9:45? So market, the price ran up during pre-market from this support, and then came down and rejected this daily AOV within my range, right? On the 15 minutes, this is the rejection right here. And it started going up, right? When it ran up, it came up here to this resistance level. Did you see how the volume dropped? Savannah always stressed, he laid more emphasis on on the volume, especially when it's running up, right? Did you see how the volume dropped here? And then do you see how the volume started to pick up as the green candle started to form? Right, and then price came here, volume still dropped, and then we had a retest, right, at the top of this zone, and then price range during pre-market and after hours, right? The market open, price ran up on high volume, right? And then as price started to come down, did you see how volume decreases? Did you see how volume decreases? Volume decreases and came and stopped where market structure is playing out right now. It stopped at this resistance level that we already have. It stopped right at the top of this resistance level. That means I can stay in the trade. If I wasn't already in the trade from here, that means this is time to load up or buy my calls. The zone has already been break, and we have already had the low volume retest. So now we need a high volume spike of that level to take the trade. And what did we get? Look here. After we get this low volume retest, now we got a high volume spike. Get high volume spike from the zone. Then we had a low volume retest, and then price went back up. Now we range after hours all the way through till Wednesday. I think was the holiday weekend, and just like that. So I'm using the same thing you're using the day trade and scalp, but on a smaller, I'm doing it. I'm using my smaller time frame to enter my trade, but using my higher time frame to control. I mean, to confirm that the move I'm looking at can actually happens. Okay. Okay, so Gigi said, if you can't do that, James, can you imagine you were starting with an account size of 2,000 right now? Please walk us through your thought process to swing that. Well, I can do that, right? Okay, so if I'm starting with a $2,000 account size right now, how many times have we seen a SPS trade go from $75 to $300? Or 1 day to expiration SPS trade go from $150 to $750. We have seen that a lot. So just with the risk management aspect, right, and the position sizing, if you have an account of $2,000, right, if you want to use 20% of that account, right, that's $400. I think that's $400. Yeah, that's $400. All right. So if you want to use $400 of that account to trade, to swing trade every given day, as the account increases, you stay there till you hit your goals of increment to scale up, right? If I'm using, if I were you, I would use 20% of my account. I'm not going to take the entire 20% and put it all into one trade. I can do that if I want, but if I'm using 20% of my account and I'm trading spot, right? So let's see something real quick. I'm going to see if we can do that. Yeah, all right. Don't want to display account info, but what I would do is use my iPad to see if I can share that with you guys right now real quick. But so if you took the spot 395 calls that I had, that I signaled out, not signaled out, we talked about it on pre-market call, I think it was the first week of trading. The 395 calls that was there for January 27, if you guys remember, right? 395 calls for January 27, and I said 385 weekly at that time. 395 calls right now is at 678, 679. That contract was at 209. So if you're using 400 out of the trade, that means you have the opportunity to buy at least 2 contracts. Or based on the account size, you can choose a strike that can enable you to buy at least 2 to 3 contracts with the $400. That if you want to use the entire $400, right? That means you are able to scale into that trade. Now you got $400 that you are not using at once. You got $400 that you are scaling into. That means you want to buy contracts at which price? So if you got 400 and you divide that by 3, right? Divide by 3, that's $133. If you buy contracts below $150, $133, you buy 1 day to 2 day expiration, you can literally scale in to reduce the emotion. For example, price price came here, right? Price shoot out from here during overnight pre-market. So let's just say this was 9:30, right? Price went up from here, and you need a retest at this AOV to buy contracts, right? If you already bought a contract here after price came and bounced off here because this is a support level, you bought 1 contract because you want to buy 3. Price went up, you should be securing profits here and seeing if you can load up or open different position when price comes here, especially when you're trading with a small account. You always want to secure profits. You never go wrong with securing profits. If you don't want to secure profits and price came back down here, you still have opportunity to load to buy 1 more contract because you wanted to buy 3, but you didn't buy it all at once. Now you are scaling and you scale in to lose less. Now, price still go from here all the way here and rejected resistance. You should be out of at least 1 or 2 of the contracts right here and leave runners. This was for January 27th. If you would have bought the 400 calls, you would have paid, I think, 165 or 175, right? No, let me confirm. You would have paid way less. Just give me a minute. Let me take a look at how much the 400 call was. 400 call runners are around $376. So it was $118. That means you could have bought 3 contracts of that 400 calls, right? And you would have took up maybe 2 profits from here and you leave your runners to do the heavy lifting, right? So with swinging with a $2,000 account, if you want to swing for $2,000 account, you should be able to take profits before the market closes at the end of the day. You shouldn't be looking to get into a play at 355 at the close of the day. You can if you want to, if the setup is dead, if it is present, and if you are willing to live with the risk, right? But what I would do with a 2K account, which I'm trying to grow consistently, I would be swinging 1 day to 2 days to expiration during the morning hours that I can secure profits before afternoon, right? Or during afternoon or before market close and leave at least 1 runners. And I will be going for contracts or strike prices that I can buy 2 or 3 of, where I should be able to scale in and scale out. But if you're buying contracts where when you buy 1 contract or you're choosing strike price where the cost of 1 contract is the entire 20% of the account that you want to trade, then now you got to be fast in taking profits. Now you cannot leave runners because you got 20% in and you are risking 20% on just 1 contract, which is not a bad thing, but it's for me, logically, I wouldn't do that. With a 2K account, I'm trading 20%. I'm buying contracts below $150, right? To $125 to $100 that I can buy multiple contracts. I can buy 3 or I can buy 4. I will be able to scale in and lose less and scale out and lose less. I will always secure profits before close and leave at least 1 or 2 runners when necessary. You can scalp or you can day trade your swing trade, meaning you can take a swing trade out of morning and you see that it's not necessary to hold this entire contract. It's not even necessary to hold my runners at close because I've already made 200-300% from that particular trade within a day, and I still have 1 week left on it, or I still got 2 days left on it. You don't always have to leave that contract. So you can always take your profits and you come back the next day, you do the same thing. You can day trade that particular swing trade system that you already have, right? So what would I do? First of all, I'm risking 20% of my account on every given day to trade. That's number 1. I'm not buying contracts above $150 to $200. I'm buying contracts that I can be able to afford at least 2 to 3 of them. That's 1. And then also what I'm doing is I am not holding my entire position overnight. I'm securing profits. If I take a trade during the afternoon or during the AM hours and the stock is just ranging at close, I'm not in profits and I'm not down. I'm most definitely going to clip it and come back the next day and see if I can get another trade, because you're not in profit. You are not down. You are just at, let's say at break even, right? You are $0 in profit, right? If you hold your entire position to overnight hours and price gapped up or gapped down against your position, now you are down big the next day. So I will always secure profits before close and leave runners, or if I'm not in profits before close, I can close the trade and come back the next day. If I'm trading with a smaller account, that is based on my account size, because I'm trading with an account that I cannot afford to lose. As my accounts grow, my confidence grows, then I start to scale up. Then I can afford to leave one or two contracts on board to see what happens overnight. Right. So with a 2K account, you want to have a predefined range that you will stick to us. You want to have a precise position size you're going to stick to us, and the cost of the type of contracts you're going to be buying that you can stick to us. Right. So with 2K, I'm going to be doing weekly, right? And then 1 to 2 daily expiration, trading SPY, QQQ. As my account increases, I switch to XPS. You ask me about my opinion, what would I do? That's just what I would do. As my account increases, then I switch to XPS and then increase my accounts, my position size. How am I determining my daily AOV? I determine my daily AOV based on market structure, places on the chart where price came, and then I'll make some type of a reverser, right? Or changing trend or continuation. How can I see this strategy? I can see this strategy can work. It's not just swinging, but even creating a daily basis. Exactly. This works with day trading, with scalping, with swing trading. That's what I said. This session ain't just going to be about swing trading, but a lot of information going to be here for swing trading. So I would take 1 or 2 more questions because we are already, I think we are already past time, right? I'll take 1 or 2 more questions and then we can wrap it up. But before then, Dementor, do you guys have anything to say?
I mean, it is the grand finale, so maybe I could share a thing or two after you finish answering these questions. What you think?
Sure.
All right.
I'm still waiting for some questions. So we got Dan, we got Tola, we got Bill and your brother, Tavano also in the building. So if you guys don't have any question for me, I'll give them the floor. So 3 of them, if just in case anybody have something to take to chop in, they can go ahead and share something with you guys that can also benefit you guys, can offer some value towards the session tonight.
First and foremost, please, y'all drop some gems, some fire, some unicorns, some sprinkles, some goats. Drop any emoji in your phone for our billionaire brother. He absolutely smoked this, and he's going to be changing a lot of lives, especially for you guys that are working and you're looking to swing trade your way. You may not be able to watch the computer and things all day. This is going to be a game changer and a life changer for you, right? So getting a lot of love in the chat. Real quick, bro, pull your chart back up. Let's work. First things first, all right? I want y'all to take notes, okay? Now, Billy, I want you to go into your settings, all right? ES, let's talk about ES. ES is the S&P futures. ES moves in ticks. Ticks are basically 25 cents. So first things first, if you want to have super accurate levels, especially on ES, go to general, okay? Yeah, go to general.
Yeah.
And then you want to snap, right in the settings, snap drawings, hit that drop down where it says none. OHLC. OHLC stands for open, high, low, close. So now, anytime that you put a level, it's going to automatically snap perfectly. Remember, as I just said, ES moves in ticks. That's 0.25, 0.25 cents. So from here on out, you will not have any one of these odd numbers. Hit apply, hit okay. So you're only going to have 25, 50, 75, or even dollars. So your levels are going to be even more accurate from here on out. First things first. Hit apply, hit okay. Gigi, what's up? Talk to me. I'm not holding out. I just, I give information we need. Secondly, okay, let's talk about premiums real quick, or strike prices, okay? Now, when we discuss premiums, when we discuss strike prices, When we have times of high volatility, right? That means the market can fluctuate violently in either direction, okay? When you're swing trading, especially off what James just showed us, all right? If we're gonna take low risk trades, okay, let's say the market runs up to an area of value, the top of a congestion zone, you wanna start to look at premiums and plays where the volatility is low, okay? Where the volatility is low, start to pay attention to volatility. When the volatility is low, that means your premium prices are going to be, as we like to say, pookie prices. They're going to be very, very inexpensive. They're cheap. Then when volatility picks up, what do you think is going to happen to the pookie prices? Y'all tell me in the chat, what is going to happen to pookie prices?
It's gonna take you
Spike Lee, right? We're going to go to the penthouse. Exactly. So I want you guys to start, if you're going to be swinging, start to, you can add your implied volatility, all right? Implied volatility to this. Now, another thing, I want you guys to also start paying attention to the almanac, start paying attention to seasonality, okay? You compare the implied volatility with the historical volatility of the stock, and then what do you think happens, okay? We turn Pookie into penthouse with low risk trades off of these levels. But I'm gonna go back on mute, my billionaire brother.
Thank you, Dan. Thank you for sharing that. Thank you for sharing that. I'm sorry if you took your notebook late. He's done. It's done. He left you hanging. That's how the folks from New York always do. You got a taxi driver pulled up in front of you before you look at the U-turn. Like, I thought you were speaking me up. No, I wasn't. All right. So Tola, Tavano, are you guys gonna come in and say a word or two to our people?
Yeah. Man, James, please put some fire in the chat for my billionaire brother James. He just smoked this whole session just now. It's like, it's literally on fire, man. I'm super proud of you. Definitely, just keep on doing what you're doing. You are, definitely going to help a lot of people make a lot of money. And you are definitely going to continuously, help your family out, help your village out. Just keep on doing what you're doing, man. You really a light. You and Tavando, M Descent, and a lot, and everybody in this chat right now, and everybody that joined you this weekend, you guys have a special light to you. There's no coincidence that you guys are here with us this weekend. No coincidence that you guys are here with us tonight. So, just make sure that you guys are putting in the work. Make sure that you guys are applying what he's teaching you guys. This is like really golden stuff. So make sure that you guys are, putting the secret sauce to work, right? You got the Krabby Patty formula. So, James, really proud of you. Shout out to you. We put a lot of trust in you to do this, and you definitely delivered, man. So shout out to you, and thank you again for sharing this content and sharing your secret sauce, man.
I appreciate that, my brother. I really do appreciate that, and I appreciate you guys for trusting me also, to be able to share my strategy, to share my journey with the community. Like, I really do appreciate that. That means a lot also.
Absolutely, bro. Definitely deserve it. Definitely earned it. As we always say, everybody eats, each one, reach one, teach one. And, it's dope to see, people got to see it live and direct, real time. You coming through every single day, finding your footing, and then people watching you grow right in front of their face. So that's why this was like, really important. The same thing with our billionaire brother, Tabando. This is really important for you guys to be able to share this. And, everybody can put their own flavor, put their own seasoning on, and get as much information from us as possible. And then the ultimate goal is for everybody to hit their 7-figure floor so we can raise it to 8. So amazing job. We can't express enough how proud of you we are. And told y'all last week, I think we might be able to hit that 100 M mark collectively. Possibly 500 M's collectively. Let's do it.
Down for that. Down for that. Yo, Tavana, you got something you want to share with the fan, bro? Okay, right. Let me come to you.
Yeah, if you could hear me, I know it's already a certain time, but it's absolutely nothing to add to your session, bro. It's completely knowledgeable, completely explained. I just wanted to let you know, and I typed it in the chat. I don't think people understand how much patience and how much work it takes to go to that level of understanding on the daily chart. That's why I don't even I didn't do it before this. Even with just trading in the day, it's hard to do. And for you to take your time out to swing trade and understand it to this level, bro, it takes a lot of time and work ethic. So I just wanted to tell you we appreciate you for that. And I respect that fully. I don't have nothing to add to that, bro. You did an excellent job.
Thank you, man. I do appreciate that, and I appreciate you for taking your time to come in and tap in with us and be able to share some good information with the people in the chat. Thank you for doing that also. So there you have it. TMP family, or whether you're in the mentorship or not, or the large share room, whether you're part of the community or not, I thank you guys for rocking with me. There was a 3-day session, and it was awesome. It was good. I love the energy. I love the vibe, and I really do appreciate y'all. So look forward to us doing this in the group chat to see how best we can change lives and make good use of the information. And again, feel free to reach out to me anytime if you have any questions. Feel free. Feel free. Reach out to me if you're not okay reaching out publicly in the group chat. You can reach out to me properly if there's something that you need help with. We can talk about that. But feel free to reach out to me at any time.
We need more billionaires. We need more millionaires. Who's next? Who's next?
Like
Put
that.
a
If y'all are
$1 chat
next
in the chat.
millionaire, yeah, put some dollar signs in the
Yeah.
chat. If y'all are
Yeah.
next, I need to feel energy. Everything is about
You need to
energy,
know
bro.
who's
Energy,
next up,
energy.
right? Copy and paste what James has taught y'all today. It's that simple. You ain't gotta do much. Copy and paste. He taught y'all exactly step by step what it takes for him to swing trade, right? And he swung trade out of 2 jobs, not just one. So if you at 1 9 to 5, if you're at home, right? If you work from home, or what do they call it? WFH, right? You could definitely apply this, right? There's a lot of people that's working from home that they got 2 screens or 3 screens, and they're able to, still monitor the charts or still monitor the market while juggling a 9 to 5. You should be next. You should be next, right? So we want to see some people step up in 2023, right? Tomorrow the market's closed, but Tuesday we starting that $500 to $1 million challenge, right? Well, it's an unlimited amount of money challenge. We're not even gonna put a cap on it because you can make unlimited amounts of money in this market. But right, we starting that challenge, and we want to make sure that you guys are there and really like immersing yourself in what is about to come, right? So we just getting started, man. James, again, shout out to you, bro. Appreciate this. Let's get it.
Energy, and intention. Every single thing is energy and intention. If you believe that you can make an M, you right. If you don't believe you can make an M, you right. Whatever you believe, you're gonna be right. So let's focus our energy and intention on everything that we do want. Let's leave out anything that we don't want. Again, we are starting a challenge on Tuesday, 500 to infinity, right? It doesn't matter how long it takes you to get there. The most important thing is that we get there and then we keep elevating and raising. All right. So again, thank y'all for rocking with us. James, amazing job, bro. We couldn't be more proud of you. Everybody that came on and showed love, we appreciate y'all. Y'all have an amazing evening. All right. 7-figure floor, no ceilings. Y'all be safe, y'all.
You are your own mind. Let's get it, y'all.